Former cryptocurrency titan Sam Bankman-Fried has been convicted of fraud following a verdict delivered by a New York jury on November 2nd. The conclusion of this trial marks the culmination of a legal battle in which Bankman-Fried defended himself against allegations of criminally mismanaging his crypto exchange, FTX, and trading firm Alameda Research. After more than a month of courtroom proceedings, the jury took just 4.5 hours to reach their verdict, finding Bankman-Fried guilty on all 7 charges brought against him. These charges include wire fraud, conspiracy to commit wire fraud, and conspiracy to commit money laundering. He is now slated to be sentenced by Judge Lewis Kaplan on March 28th of the following year, facing the possibility of decades in prison. Sam Bankman-Fried, the founder of the now-defunct cryptocurrency exchange FTX, has been convicted on 7 counts, including wire fraud. The U.S. Securities and Exchange Commission, SEC, had alleged that FTX was fraudulent from the start, pointing to a multi-billion-dollar deficiency caused by his own misappropriation of customer funds. Bankman-Fried launched FTX in 2019, and its valuation skyrocketed during the post-pandemic crypto boom. However, prosecutors contended that the operation was fraudulent right from the outset. While Bankman-Fried promoted the exchange as safe and secure to investors and the public, his former colleagues testified that it falsified financial data and granted secret privileges to Alameda, including a $65 billion line of credit and the ability to borrow FTX customer funds, pushing Alameda's balance into negative territory illicitly. The downfall of the FTX empire began after a November 2022 CoinDesk article exposed the secret mingling of funds, and Binance CEO Changpeng CZ Zhao announced his withdrawal from the exchange. Subsequently, Bankman-Fried resigned and FTX filed for bankruptcy. He soon faced both civil and criminal charges related to fraud and money laundering. Before his trial, Bankman-Fried's behavior drew considerable attention, antagonizing prosecutors and the court. Initially under house arrest, he was sent to jail in August for violating his bail conditions, including watching a football game through a VPN and leaking his ex-girlfriend's diary entries to the New York Times. His former girlfriend, Caroline Ellison, the former CEO of Alameda Research, had pleaded guilty to federal charges and testified against him during the trial. This case has further tarnished the crypto industry's reputation, given Bankman-Fried's high-profile status in the field. Several other prominent companies are currently facing civil or criminal charges both in the U.S. and abroad, and some have experienced sudden collapses akin to FTX's demise. During the trial, Bankman-Fried's defense contended that his business venture had honestly failed in a high-risk environment. He denied direct involvement in supervising the problematic code updates that enabled Alameda to utilize FTX funds and asserted that he did not participate in trading or question employees about the missing billions. His testimony contradicted statements made by Ellison as well as his former roommates, Adam Yedidia and Gary Wang, the co-founder of FTX, and family friend Nishad Singh, all of whom had worked under him and subsequently cooperated with prosecutors. Wang, Singh, and Ellison are currently awaiting sentencing.